Welcome to today's FinOp Consult YouTube video. And in today's video, we're going to be talking about how to file the rental web-based returns as per the new changes of the Uganda Revenue Authority system. On my screen that I'm presenting, we are talking about the rental, the features, and we are displaying the features in the previous system or Excels we're using, and the features in the new system that we're going to be using. So looking at the previous system, we had multiple returns, limited in data tax, and it was combined with our business income when we're filing for the rental income tax. But with the web system, the features that are included are a rental section is excluded from the main income tax return, meaning to be a separate return or a standalone tax type of its own. And this is effective with the period of July 2022. Income is declared per property, as we shall be seeing, and then also have a detail of the loan schedules, given the fact that real estate is supported more with loans from various financial institutions like banks, among others. This web return will be both for the individuals and the non-individuals. That is the individuals as the individual landlords, and then the companies which own real estates and properties that they are renting out. So I shall begin with a walkthrough through the individual return. Yes, step one, you'll go and log into the account. As you can see the icon, this is your interface that you'll be seeing. Log into the TIN account. Step two, you select the menu and go to the rental return. As you can see on my screen, I can try to make it visible. You select the rental return just down here. Moving on, step 4, we enter the tax period, and that is starting July 2022 and onwards. As I've told you, you put in that there. Sorry about the July 2021, it's supposed to be July 2022 here. And then step 5, enter the properties and the details, e.g. the size, the location, and the acquisition type. All that is given, and we'll have to include it. As you all know, URA has come up with this, but already in our Income Tax Act, URA set provisions of the various rates depending on the area the building is located, on how much the cost per square meter would be minimally. For example, if you're staying in Tinda, if you look at the income tax return, if you look at the Income Tax Act, you'll see how much a 2-bedroom house is averagely being rented out. Yes, those values indicated in the Income Tax Act were based on an assessment done by URA. So you also have to be keen. You can't go ahead and say you have a building in Tinda, but you're renting out a 2-bedroom house for 200,000. You take note of that. So moving on, we have step 5, that is the property details, where you choose the property type. Either is it a residence house, is it a flat, is it a warehouse, land, commercial building, among others. The code, the acquisition type, the details of first acquisition, the building name, the district, the municipality, among others, all that. And you keep on adding the various properties. As we have also said that in step 6, we'll give the tenant details and rental income per property. So if you have 6 flats, meaning you have to give separate tenant details for each flat. That's what they mean by the tenant details and rental income per property. Take note of that. When we move on to step 7, total tax shall be populated per property. As you can see there, we have a building, and you're saying our rental income earned on that building is 55 million. The tenant details are included, and they ask you, does the building qualify for capital deductions? So depending on the scenario, you either say yes or no. And then the rental tax shall be assessed, that is step 8, on the total income. For individuals, as per the last amendment, it is capped at 12% after deducting the threshold for us to get the chargeable rental income. Then below we can see the summary of our tax paid in advance, just in case you paid in advance upon the provisional returns, which is indicated here as prepaid tax. That is for instances whereby you've paid tax in advance after filing your provisional return, which is now offset here to either have a liability or a claimable. And thereon, you go forward and submit your tax return. So that is it for the individuals, and as per the last amendments that we currently have, the rate is capped at 12% for individuals after deducting a threshold. When we move on to the non-individuals are allowed a deduction for expenses, and the expenses are capped at 50% of the rental income. Meaning, if your rental income is 10 million, only 50% of 10 million, which is 5 million, will be allowed for expenses. And with the recent amendment also, the other, in case you had expenses of 6 million, the 1 million will not be carried forward. That is one of the things you should take note of. And then the instances whereby your revenue is 10 million, but your expenses are 2 million, you only consider the 2 million. The 50% cap of expenses is only if you meet the 50%. Let's say if you have 5 million for expenses, well and good. But if you don't meet the 5 million expenses, then you only claim the expenses you have incurred. We can go ahead, as you can see, computation of the liability. So this will be basically on the revenue. To be basically on the revenue, expenses are captured in the expenses schedule. You go ahead and give a detail of the various expenses that you're stating: commission, electricity, insurance, management fees, like property managers, those who are having their buildings managed by, for example, Knight and Frank, medical insurance, repairs and maintenance of the buildings, salaries and wages, security, training, transport. Yes, depending on the operations of the entity. Among expenses, we do not include the expenses of capital nature. Hope you understand what I mean by capital nature. Those expenses are not included, they're not considered expenses. Those are capital items which have to be capitalized. For example, construction, depending on how you're doing your accounting entries. Then loans details must be provided and copies of loan agreements uploaded. Wow, this is interesting. Because as I said earlier, when it comes to rental business, many developers and real estate owners obtain various loans from different financial institutions. So, and yet, the more loans you have, the more interest expense that you get, which is an allowable expense for tax purposes. Therefore, URA wants to know, in case you're claiming a lot of interest expenses, share with them the details. Upload the loan agreements on the various loans, the TIN of the financial, you can see the details there, the name of the financial, in case it's Bank of Africa, the loan you're getting, from what date to what date, the amount, the duration, all that information. They want to have it to ease their reviews on allowing some of these expenses. Yes, you go ahead and give so many details, the interest rates, anything that we find that is relating to those loans. you have to upload copies to the system. Then when it comes to industrial building deduction, IBD, and initial allowance, only properties that qualify for capital allowance shall be enabled in this section. So, depending as per the Act, what does the Act say? Only those properties that qualify for IBD shall be, and initial allowance shall be enabled in that section. So, you have to take note of that. Then here also they're highlighting about the capital deductions. As I told you, we have what we call capital expenses. For example, building improvements are captured in the following year. Those are the major improvements. We don't consider them as expenses. Yeah. Hopefully this video was a bit elaborative when it comes to the rental web return for both individuals and non-individuals, the companies. Maybe one thing I forgot also to talk about, the tax rate for non-individual is currently at 30%. So after having your expenses, which is after having your sales, which is 100%, let's say that 10 million, allowable expenses are capped at 50%, which is 5 million of 10 million. The balance of 5 million will be taxed at 5%. At 30%. In case you have any withholding tax that is strictly and or directly relates to the rental income, they will be deducted also before making any payments, or in case you have any advance payments, they will be deducted from your liability. The tax rate for non-individual is 30%. The tax rate for individuals is 12%. I hope the video hope I've tried to be a bit more elaborative, and the video will be of help to some of you on how you can go about the rental income. In case of any questions, you can write your comment. You can write your questions in the comment sections, and I'll be able to respond to some of the questions. Thank you.